Good morning, traders. It is 8:02 a.m. Chicago time on Wednesday, the 29th of June, 2016. Thanks for joining me. Hopefully the feed is clean again this morning. This is another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. So overall, the overnight session did bring a rally. The key news is that given the Lisbon Treaty and the process that's required for Britain to exit the EU, the likelihood of Britain being affected by this or fully exiting is going to be in 2019 earliest. The mechanism under this treaty says that you have to provide a 2-year notice period. But currently, it looks like the Conservative Party in Britain is required to find a new prime minister, and then go through a bunch of political conferences, and then once that's done, they'll send the minister out to invoke Article 50, and then from there, the clock begins. I know a lot of voters are coming on and changing their minds about the vote, but the vote is what it is. That's democracy in action right there. Mario Draghi came out yesterday and says Brexit could reduce the Eurozone GDP and shave off 0.3 to 0.5% of growth over the next 3 years. The British pound is recovering nicely. It's pushing higher. And man, a lot of conversation. And that's really it. This afternoon we get the second round of stress tests from the Fed. If the banks pass these tests, then they're allowed to issue dividends and proceed with buybacks with shareholders. Issue dividends to shareholders and proceed with buybacks. So. Looking for those results in the health of the system, the financial system, later this afternoon. As far as what we're expecting, oh, and by the way, just now, we got a whole bunch of numbers. I put them on Twitter. I won't go over them again. It's not necessary. And then looking at market sentiment, the Euro Stocks 50 are up 2.66%, leading the pack. Ahead of the DAX, the Eurozone recovering nicely. DAX up almost 2% at 180. The British pound is trading at $1.3475, up almost 1%. The Russell's the same. Crude oil's up 0.77%, about 0.8%. S&P up 15 points, or 0.75. Nasdaq's the same. The Dow is the same. Gold is up slightly, which is interesting with everything else. The euro's up, also interesting, and the bonds are up. The U.S. bonds are up. The products that I watch that are down are the Bund, the Euro Bund, the yen, the U.S. Treasury note, 10-year note, and the U.S. dollar. So overall, I'd like to say that money is moving towards risk, and we see that in the gap up and rally overnight. However, it's interesting because money's also moving into gold and the bonds, so there's still some tentative behavior there. Although we've seen from the action yesterday and the prior day, the buyers are definitely stepping in and seeing value in buying the S&P 500 at the prices below. So let's switch gears here and look at what we usually look at. We'll look at yesterday's expectation and hypothesis. Let's switch here. Oh, switch screens. There we go. So this was from yesterday. This was from yesterday here. The primary hypothesis yesterday is we're opening on the edge of Monday's range on the high side. The expectation is for an open auction on the open, either in range or out of range. Was looking for a dip down The ideal setup would be a dip down into the 96.50, 97 on the S&P, and then overall, the hypothesis is for a rally higher. Of course, I mentioned on Monday the target above is 2042. The 2242 area is the most traded price since October 9th, 2013. It is the most valuable price in the area in terms of how much volume it has traded. It is the composite point of control, key reference level, and very, very important. That would be the target on the upside. So yesterday's primary hypothesis worked out very nicely. I'll go over the second hypothesis real quick. The second hypothesis, if as always, you can always go back to my YouTube channel, youtube.com/futurestrader71, and you'll see, you'll be able to watch this video again if you need to and look at the logic behind it. The second hypothesis is a push up through the gap zone. There was a gap zone here. Oops. There was a gap zone here. This was a gap zone, and the expectation was to test the other side of the gap zone, find its sellers, and rotate down, and the target would have been 1986. 1986 on the downside. So that was the second hypothesis, which did not appear. So the primary hypothesis worked out. And looking at it, the actual market action yesterday to describe what we saw happen. This is a 5-minute. Let's switch back to Arenco. And what we have here is an open auction. You can see there's a consolidation right here on the open. Short-term traders in control. And then early on, it pushes through and gets into the range of the prior day. It looks like hypo 2 is in effect, hypo 1 or hypo 2. We don't know yet. It tests down to 2006 into the range of the prior day, and then it holds it, and then from here on out it's hypo 1 all the way, and it ended up finishing yesterday because we broke the IB low, broke the IB high. We ended up finishing in what's called a neutral extreme, with the market closing near highs, very bullish. Essentially what the market has done is it has tested lower, has failed to find more interest on the downside, has succeeded in finding buyers, and therefore the next likely rotation is higher, and then breaking the other side and pushing and finishing on the extreme tells us that we are likely to drift upwards overnight. That's the usual behavior of the market. When we close on highs, essentially the auction is being interrupted by time, and the auction is not governed by time. It's governed by price and volume. So the expectation is for the market to continue higher. And what does it do? It continues all the way through our 2042 and puts in a high of 45.25, and it's trading 2044 currently. So it has reached that key target mentioned on Monday and yesterday on the upside. That's how things are shaping up or shaped up yesterday. Here's what the overnight session looks like. The overnight session had a small retracement and continued to push higher. The profile is very square, very bulky. What does a square profile tell us like this? A profile that has even prices, even volume across multiple prices. It tells us there's no consensus or agreement on value, and when we have that, generally the market continues to explore up and down, currently in the up mode. So we continue on this channel up in the overnight session, but overall the market's not finding consensus, so I'm expecting it to continue to attempt higher, to keep searching for those sellers. Okay, so that's how things are shaping up overnight. Keep having to clear my throat here. So what are we expecting today? We start because we have dropped and are starting to overlap back. Um, let's kill some of these lines here. It's very noisy. Okay. Since we have dropped and are starting to retrace back, what we need to do now is the usual. We need to create a micro composite because we see that yesterday closed back in the range. And with this micro composite, we start to see what the key areas are that the market is likely to test. So you could see here the multiple distributions that the market's likely to test, and those areas become very important for going forward. So, for example, not that it'll likely do it today, but if we drop below this 1997 and a quarter MCLVN low volume node right here where there's no volume, then we know that the expectation for a test of the high volume node is likely in 1990 would be the next target. So what this does when we break up the composite into these portions, what this does is it tells us what area we're in, and you could see that this profile here uh, is very has many distributions, and we are currently yesterday we were in this middle distribution, and we have pushed up into the next distribution up, and so that frees us up to test all the way up to this point of control from Friday, Brexit day, 2047.50 on the high side. So that immediately gives me an idea of a potential test target up top and a potential resistance point, and the resistance point being this key key LVN up here at 2045.50. 2045.50 is this small notch right here. It is a low volume node. It's the first deep low volume node next to the point of control, above and below the point of control. This notch also. These are called the key LVN, and those are the key areas that are likely to be tested before the point of control is achieved. And where's this price currently? It is at 2045 and a quarter. Where's 2045 and a quarter? Where's the high of the session, of the overnight session? 2045 and a quarter right here. So the market's already pushed into this area, and what it's likely to do now is we're likely to open out of range. We're likely to open in an open auction, and I'm looking for a test up into this point of control. The key number to remember here is about 2047.50. I'm looking for a test of that 2047.50. I'm looking for it to find sellers, and I'm looking for it to start rotating down. And I don't know how much of a rotation down we get, given that there's news feeding the market constantly. And of course, the news is refuting or taking back some of the Brexit anxiety, which will lead us to higher prices. But if the auction was left to its own devices, this would be your primary hypothesis: an open auction out of range, a test up, find your sellers up here, chop around, and then look for a rotation down back towards the prior day's range, and the target would be the high of yesterday as the MCLVN before it starts getting into the range of yesterday. So for me, I'm looking for a move from 2047.50, 2048 back down to 2034. 2034 is the key target, and that gives me about 13 points of range on the sell side. Secondary hypothesis: open auction, we get responsive, a responsive move down initially. The responsive move down, its task is to find those buyers, and we're looking for a push down. It's likely to find those buyers somewhere and then start to rotate up, break the high, and then drop in the middle and be stuck in this point of control. Why am I expecting it to push up and then come back and balance? Why do you think? If you follow the principles covered in the webinar series, webinar 2, maybe you understand that around the point of control or high volume area, there's a magnet, and the market tends to get tangled in those magnets because they are acceptance prices for the market. And so we expect the market to test up, test down, and get stuck in the middle. in this sort of environment. We are at the composite point of control. I expect the market to struggle to get out of this area a little bit. Again, this is the most accepted price in the last 3 years or so. So that those are the two primary hypotheses. I want to remind you again that tomorrow we have the AMA, open AMA at 4:30 Eastern. The link for that is on the Twitter feed. Just if even if you cannot attend, just register so that we can get our people can get a list of participants who will be sent the recording. So even if you don't attend, just register so that we can shoot you an email with the recording once it's all said and done. Good luck today. Keep monitoring your risk. Don't stick your neck out too far. And I wish you the best. Take care.